Hello, everybody. This is Toby Gennaro, and we're getting ready to hang on. I'm just trying to get my my slides here. Well, it was working. Let me see here. We usually don't have too many difficulties, but we seem to have one today. Well, let me. I'm going to shut this down real quick and start it up again. Sorry about this. All right, let's see. Okay, here we go. I think we're ready. There we go. So let's do a sound check real quick. I already had you never know. Some of this time this stuff works, the technology works week in and week out, and all of a sudden you have a glitch. So let's make sure that the sound quality is coming across loud and clear, that you guys can see the current splash screen. It says live technical analysis, and you guys can hear my voice loud and clear. If that's the case, just let me know via the question box on your screen. Give me kind of an electronic high five, and that would be great. And then we'll be ready to go for the content. Great, guys. Thanks for doing that. So let's jump in here, and we'll get the recording started and get that going. Hello, everybody, and welcome. I'm Toby Gennaro, and I'll be your presenter for today. The topic for today is live technical analysis. And so I'm going to be talking through a series of specific trade setups in real time that I've already kind of locked in the markets, and we'll walk you through those and show you how we can look at things technically and utilize some of the Nadex contracts to hopefully leverage some of these market moves. Now, for those of you that are on the live webinar, if you have questions during the session, please type those into the question box on your screen. I'll be asking you guys some questions as well, so we'll try to keep it interactive. I just need to put up this risk warning and disclaimer as we normally do. I'll leave this up for about 30 seconds. Just have a quick read through if you would. What this is saying in brief is that we provide education only, which means we do not give any financial advice. And as most of you know, trading the markets can be risky. It's not suitable for everyone, and you should seek independent professional advice. All right, everybody good? And then just one more disclaimer here from Nadex. You can have a quick read through this one, and that'll wrap up the disclaimers for us. Okay, everybody good? All right, let's get things started here. Now, to kickstart your trading each and every Tuesday morning, you can utilize this regular feature from the trading team at Trade with Precision. And you know, with so much going on in the markets each and every week, the big question is, how can we spot opportunities across multiple markets, multiple time frames? So you can join us weekly for this insightful live webinar where we'll be focusing on technical and trend analysis across major markets to help find an answer to this question. So let's go ahead and jump into some of the live charts, see what kind of trading opportunities we can find for today, and then show you what those are all about. So what I did before we got started here this morning is I took a look at a few charts that I thought would be good to consider for potential trading opportunities today. Let's go ahead and take a look at some of those. We'll be looking at the S&P 500 index, and then we'll also take a look at the dollar CAD, show you some of the ins and outs of how the price action is stacking up, and then show you which way we can go with those with some Nadex contracts. Now, I'm going to be doing something a little bit different today that I really haven't tried before, but I'm excited to walk you guys through it. I'm going to be utilizing the Nadex charts instead of the charts I normally use. And you guys always have a lot of questions about, you know, hey, what charts are you using? And so I want to kind of get you guys familiar with the charting within Nadex. I think it is very good for trading Nadex contracts. The reason I use different charts usually is because it's just easier for me to talk through the price action in the way that I have my charts set up. I can look at multiple time frames and show you guys things a little bit faster in a shorter period of time that we have for these sessions. But I'm going to try to do that today. I think I have a plan to kind of walk you guys through it, and then we'll kind of introduce you to the platform as well and show you how we set up, how I set up the charts, and we'll kind of talk through, you know, these two things that we have. So let's take a look. I've got. I'm going to look at the S&P 500 first, and so we'll just pick up a chart. These are the charts that that you get with Nadex, and there are a number of different things that that you can do here. I have mine set up with 3 moving averages: the 10, the 20, and the 50. And so you'll see the 50 in red, the 20 in blue, and then the 10 in black. And that's what I'm going to be using. And when I see those moving averages in order, the 50, 20, and the 10 all fanning out to the downside, we have lower highs, lower lows with the price action. That's pretty much you know, what I want to look at. Now we're also looking at a daily chart, which is, you'll know, every time I change the time, you'll see it right up here in the left-hand corner along with the market that we're actually looking at. And so if you want to change through time frames, you can just click anywhere on the screen and you'll get this pop up, and you'll have all these different time frames. We'll just kind of work through some of these, and I'll kind of talk through about, you know, what I see the U.S. equities doing here in the coming days, coming weeks, and even maybe something about what might be happening today. And then you got all of your different indicators that you can click on here. And I've added the relative strength index as well as the MACD, and so really you just have 5 indicators on the chart here, and that's what we'll be looking at today. So really not any different than what I normally do on the charts, just doing it with the Nadex charts. And then, you know, this is going to be the indicative pricing along here, which is, you know, it's the average price that is actually used in the calculation for the settlement of the contracts. Then we have the binary ladder of contracts that sits right over top of the price action, and then you have these lines, which is basically the strike price for a couple of the contracts that we see here. And then you get this little arrow here, and you can expand these up and down and reveal more contracts underneath that, and it'll spread out the candles a little bit. For right now, I just want to talk through the price action. And we'll kind of see how that goes today, and then maybe in future webinars we can do some different things on the platform, show you guys a couple other things that you can do. But for right now, let's get to the charts and take a look at the S&P 500 index. Reason I want to look at this is because you know, we've had a lot of volatility on U.S. equities here in the past, you know, say the past couple of months. And the last 2 months, we've really been in kind of a range. And if you look at that range right here, we've got a top, and I'll put in some lines here so you guys can see. We'll do a horizontal line right around here, and looking at that nice little flat level right there. And then I don't need to put in one at the bottom because we already have a binary line right there, right at around 2,600. And as you can see, this is right around 2817. So let's call it 2,800 at the high, 2,600 at the low. And we've been ranging way back since, you know, what, November 15th. And we've reached a bottom here at 2,600. We moved back up very precisely up to that 2,800 level, then back down, came up a little short, and started to rally, came back up to that 2,800 again for a third touch, and then sold off and came back down and put in actually a lower high from the previous high, and then put a lower low in from the previous swing low, and we even dipped into a lower low from that previous low that we had way back around, well, I guess that's what, October 29th, it looks like. So anytime we're in a range like this, and I think I've talked about this sometime before, whenever we're in a range like this, the market is consolidating. So a lot of people like to trade the range. You certainly can do that. Nadex contracts give you a lot of protection to do something like that, and you have some very clear levels at which to short, some very clear levels at which to go long. But the one thing we always want to keep in mind is that when we're in a range like this over an extended period of time, the market is just consolidating in price. And what that consolidation means is at some point or another, we're going to get a breakout either to the downside or we're going to get a breakout to the upside. And it really kind of depends on what that higher time frame is doing. If we're looking at the monthly and the weekly chart, obviously we'd have, you know, a very strong upward trend. We've been in a bullish market with equities for the last, almost 10 years. So it's been one of the longest bull markets I think we've ever seen. So in looking at this, I'm really interested in trading the breakout. Whether that break is going to be to the top side or to the downside remains to be seen. But I'll show you a couple of things that we can look for to help us do that. Most recently, we broke through this level just slightly. We've got a couple of touches. We don't really have a solid flat level on the bottom. On the top side, you can see that we have two touches that are very precise, very accurate. And even the third touch is really just within, you know, a couple of ticks or a couple of points of that of the previous two levels. We don't really have that here on the downside. We have some levels that are quite a bit scattered about, but it still does create, even along here, we do have some pretty precise touches right in and along there and then in along there. So we do have an initial two clean touches and then a couple of touches there, and then we start to get some breakouts from that level, but they don't really take hold and they don't really accelerate. We're getting some rejection candles like we have right here. We're getting some divergence in the MACD and the RSI. And one of the things we don't want to be doing is we don't want to be trading these breakouts to lower levels when we're getting a lot of bullish divergence like we're seeing here. We've got one leg and then two legs of divergence. And that's really not something that I like to see a whole lot. But when we have, you know, a market turns, we want to pay attention to these things, and we want to make sure that we're focused on, you know, a breakout in this level. I would anticipate a breakout to the top side, but I'm not really feeling that bullish about the market. So I'm thinking that a break to the downside is probably more of something that's in the cards for us than a breakout to the top side. And so one of the things I was thinking here, I didn't really anticipate this kind of a move in the market here. Once we broke this level on this candle right here, this rejection candle, I thought we'd probably move up and at least move to probably, you know, half the distance of, you know, from 26 to 2800, put us probably right around that 2700 level. Say if we did a Fibonacci retracement from the swing high to the swing low, usually when you get these rejection candles on that bottom side, they'll move up to about that 50% retracement. Then you might see some sellers coming in and then see another move back down to that low level of 2600, and then maybe a consolidation of small candles and then a breakdown to the downside. That's actually what I would like to see to give me some confidence that we're going to break this level at 2600. We're going to hold that break and we're going to continue lower. That's kind of my thought for the foreseeable next couple of days. If we get some of the China trade talks going and we get that resolved, there's a pretty good chance that we could get a market spike out of that. We could move up to the 2800 level once again, retest that. We could pull back to a 50% retracement, make another move to 2800, and then possibly consolidate with some candles and then break out to the top side. If we did that, normally the market would run the 200-point difference between the high and the low of this consolidation right here for the last, you know, the last couple of weeks. So those are some of the possibilities and things that I would look for in the price action. And I think either one of those possibilities is very likely to occur. Whether I can predict one or the other, I don't know. It really, I think, depends on some of the news that comes out and potentially some of the fundamental information that's going to cause that market to break. But at least when the news comes out, we'll see the market move, we'll see the price action, and we'll be able to know kind of what to look for in the price action depending upon what direction the market breaks. But that is essentially the you know, the plan here for U.S. equities and the S&P 500. Let's take a look through some of the other take a look through some of the other, see if I can get to the, oh, well, I'm on drawings. That's why I want to go to intervals. That's the first lesson in getting to the intervals is click on the icons down here, and that'll get you to where you want to go. If you want to draw something, click on the drawings. If you want to click on intervals and you want to see the time frames and move around through the time frames, click there, and then it'll give you all of these. I just wanted to take a quick look at the 4 hour and see what we're doing there. So the 4 hour, we've got all the moving averages fanning out really nicely, lower highs, lower lows, as you can see. Very nice. And then you can see we have some really nice rejection candles in and around the sell zone. Once it breaks the low, that's when we get our breakdown to new lows. We just set up a nice bearish candle in and around the sell zone as well. Got a break of the low as well. So being that we're at the bottom of that range, there is a potential that we could break through this level, but we have to remember that 2600 is a very formidable support level. And so we may get a retest of this level and then potentially move back up. But for right now, we're in a pretty good downtrend, and the market has a couple of good trading signals here in terms of these trend flow candles setting up. And so those look pretty good for a move, at least down to the 2600 level for where we are currently. Take a look at the 2 hour chart. 2 hour chart's a little bit mixed up right now. We don't have the moving averages all in alignment. But we still have a bearish candle there, but we can't really use this because I would need to have the 10 and the 20 period in alignment and all the moving averages fanning lower. So that doesn't work for us. If anything, the 4 hour and the 8 hour time frame would work. We don't have an 8 hour time frame on the Nadex charts. I have a request in to see if they can add that. And if we can get that, that'd probably be a nice thing to have in looking through these charts. Go to the 1 hour. 1 hour is kind of sideways as we go down to the 30-minute. 30-minute really doesn't do a whole lot for us either. So as we work our way down through some of the smaller time frames, we don't get a whole lot of trading opportunities. Maybe start something at the 5-minute, a very short time frame where we get rallies back up into this zone, and then sell-offs. And then more than likely the 2-minute would be the 2-minute and the 1-minute would be some good charts to trade as well, because you're seeing all the moving averages fanning out. You got some nice bearish candles that are moving to the downside, and then probably the 1-minute chart looks pretty similar to that. And there you go as well. But really, I think the 2-minute and the 5-minute charts have some good trend trading going with the trend to the downside, but you have to be cognizant of that 2600 level. And that's kind of where we're at. So in looking at some of these, I'd probably look at the contracts for I think probably, let's see, 30-minute. Let's look at the contracts for, well, I guess we're gonna have to go down to maybe some of the 5-minute contracts. We're really too far away from the moving average pattern to look for a trade setup at this point. The 2-minute has already broken from a setup back up here, so there's no trade there. And in the 1-minute, there's really no trade setup. I need to look for a setup of a rally of candles back up into the sell zone, just like we had here, and then a nice setup candle and get set up. So there's really no trade setup here. I'm looking for something on the higher time frames. We don't really have anything on the higher time frames either. So really, I think the only setup here is really going to be on, well, I think the 4 hour and potentially an 8 hour chart. We've got the candle setup right here and a break. I'd probably look to ride this down to that 2600 level, and then more than likely we get some bullish divergence here. Maybe do a retest of that 2600 level, and I think maybe we might be looking for some type of a rally to the upside, and I think that would be a potential. So right now we're in at 2635. We can look at the Nadex contracts, and we'll take a look at the dailies on the US 500, and then we'll look at what was that, 26 26.35. And so I want to take a look at what we have, 26.35. Let's scale down here. So 26.35, 26.36 is one that is already in the money. So if we're shorting, that would be probably the highest one that I'd go with, or in the money rather, and that would give us at least a at least a 1-to-1. 26.33 would be another opportunity there at somewhere close to about 60 for a short. 26.30, and then you kind of have a number of options there depending on how far you think the market might move. If you think it's going to go all the way back down to 2600, the big question is it going to do it in the time frame that you think? Right here, we're looking at some 3-hour contracts. So if I was looking to trade this into the market close, I'd probably want to keep something, very close, like something potentially in the money, or something around 26.33 would be reasonable. And then we could start to look at potentially a weekly contract might be a good one. That would give us about 3 days of time, which would be very reasonable. And then we can look at some of these contracts out around 26.30. 26.42 is probably too much in the money, but it's fairly close to a 1-to-1, but you're going to be giving up about 10 points there. I'd probably look at the 26.30, maybe the 26.18 would be pretty reasonable as well. And then obviously the farther down you go, the 26.06, the market price action may not actually get there. So I think these two would be a couple good opportunities to potentially look at if we're correct on the market price action. Let's take a look at the other market, the dollar CAD. As you can see on the daily chart here, dollar CAD's been really in a nice higher high, higher low movement, some flat level consolidation right there. And then we get a break out of that flat level and then back into these pullbacks, nice bullish setup candles in the zone. And then we get back here and it looks like we're setting up another couple of touches here at a level. We've got a nice bullish candle right there in the zone, in and around that zone. We're looking to get a break of the high of that candle. And then I think it looks like we might be putting in another higher high right here. So everything looks good for another move higher on the dollar CAD. If we move down to some of the other time frames, the 4-hour chart is a little bit mixed up. Moving averages are getting back into alignment, but we can see once again we have a couple of touches and a consolidation right there on that flat level. I think there's a pretty good chance of us getting a break. Let's go down and follow that up on the 2-hour chart. You can see that a little bit better. And moving averages are still not, they're getting into alignment. They're just crossing right there. We'd have the 50, the 20, and the 10, and then looking for a nice break of that level. I think once we get that break, I think the markets might move to another high. We'll probably see the same thing here, just a little bit more spread out on the 1-hour chart. Everything is in alignment, and really some small candles consolidating tells us that the break more than likely is imminent at this point, and we're just looking for a break to the next higher high. And the same thing here, except we don't have the moving averages really in alignment there on the 30-minute chart. So if we look at the 1-hour time frame, the 134 is the current level, so 134.15. If we look at the charts here, we'll take a look at maybe a daily. Let's see, that's 18 hours. Probably want to move something. Let's see if we can get something a little bit like within the next couple hours. $22 hours, that's not as good. Let's go down and see if we can find something else. 8 hours, 10 hours. Well, let's take a look at the, here we go. We've got one for 2.5 hours. That'll give us a couple of candles on the hourly chart. Somewhere between maybe 3 hours and 6 hours would probably be reasonable. Let's take a look at both of those. But 134, I think we were 134.16, so 134.20 would be reasonable. You pick those up for, $43. Still gives us a 1-to-1. 134.40 is a little ways away. Obviously, you get those pretty cheap because the market price action may not actually get there. So maybe only one realistic opportunity here at 134.20. I like to keep those strike prices close. And then we'll take a look at the 6-hour chart. 6.5 hours would be the other one. We still have a 134.20, which is another reasonable contract at a good, better than 1-to-1. Pick those up at 45 going long, and then 134.40. You're going to pick those up for about 25, but you have another 3 hours to work. So all of a sudden that becomes another contract that can come into play for us. So it gives us a couple of contracts there to play with on the dollar CAD, going higher, looking for a break of that flat level, and the charts look pretty good with that one. So I think everything there looks pretty good. Couple of opportunities there. Let's go back and wrap up the charts here. I want to talk about a couple other things. And just in wrapping things up, Nadex is making an investment in your success as an investor. That's why they sponsor events like this today. A couple different ways you guys can get in touch with us. Phone and email listed here for any questions that you might have, or you can ask me your questions right now on the question box. We'll check that in a minute and see if I've missed some questions that I can respond to as we wrap up. Demo accounts also available to provide you some familiarity with the contracts and what we've been talking about today. For current members, if you'd like to begin trading again, log into nadex.com. Take advantage of the advanced education webinars that'll take your trading to the next level. We're running those on, I think, about a quarterly basis. If you're new to Nadex, would like to set up an account, just go to nadex.com. Click on the orange box in the top right. It says sign up. Just fill in your details there. Someone from Nadex will respond via email to help get you started. Before you do sign off, there's a short survey upon your exit. Let us know your thoughts on the survey. We're always trying to continue to make content that is suitable for you and content that you can get something from. Let me take a look at the questions here real quick and see if there are any questions that I can respond to, anything that you guys have before we close up. Robert's got a question. He was asking probably a little while ago about the indicators when I introduced those on the charts. So he's asking about using the RSI and the MACD indicators. What is the third one? Oh, the third one was the price, the moving averages. So I had the 3 moving averages on there: the 10, the 20, and the 50. So I was using 3 moving averages and then two indicators, the RSI and the MACD, and then those would be the 5 indicators I'd be using. Ray's asking, do you have a strategy for the 5-minute binary? Well, it's you can. You probably have to go down to the 1 and the 2-minute charts and even down to the tick charts to trade a 5-minute binary. Those are going to move very quickly. To talk about those on the Tuesday sessions is difficult because I'm trying to explain chart trade setups and price action and some technical parameters to give you guys some things that you can use when you're looking for the trades. You can look for these same strategies on a tick chart or on a 1 and a 2-minute chart, and they work exactly the same. On these sessions today, it's kind of difficult because I just don't have a lot of time to try to show you guys, and we're actually trying to do some education here. Edward's asking, when will you talk about touch brackets? We just had a briefing from Nadex on those just about a week ago. So we'll probably maybe start doing some stuff as soon as we get the go-ahead from them to do that. We'll start introducing some of that maybe in the coming weeks. So probably definitely in 2019. We just need to get the go-ahead from the folks at Nadex to do that. Christopher's asking, can you use any of the stochastic indicators on the 5-minute trades? Well, I mean, the stochastics are basically the same as the MACD and the RSI, so we can use those. So if you just go to, the 5-minute, the 2-minute, the 1-minute, and then the tick charts, everything is going to set up exactly the same as we're looking at on the daily, the 4-hour, the 2-hour, the 1-hour. So it's just a matter of moving down to the smaller time frames. The trade setup is going to be exactly the same. Okay. Ray's asking, can you use a moving average based on the, let's see, based on the open? I don't know if you finished your question there. Can you use a moving average based on the open? Not sure what you mean by that. What we're doing with moving averages is we're utilizing the moving average lines, and we're using them as a moving average pattern. So you'll notice when I talk about the moving averages, I'm not using them as a support or a resistance level. I'm using the moving averages specifically in a geometric pattern to give me buy and sell zones between that 10-20 period moving average zone. So when I'm looking at charts, I know that I have a good chart structure when I have the 50, the 20, and the 10 all in numerical order, when they're all fanning out in the direction of the price action. And that's going to be the only way that we're going to use the moving averages. Okay? So I'm not looking at those based on the open or the close. I'm just using them in a geometrical pattern structure to give me basically a dynamic trend line that's moving in conjunction with an uptrending market or a downtrending market. Okay? So we'll talk a lot about that more if you guys attend the advanced session, and we'll introduce more about the strategies and how those work. Chris is asking, when is the next technical analysis webinar? We do them every Tuesday, so at 9 o'clock Western time, 11 o'clock Central time. So you can jump again. Sometimes we change it up a little on Tuesday, and we'll introduce a strategy, but most of the time we're doing this type of live analysis. So check with us next Tuesday, and we'll be doing it again. The advanced section, get a call into the folks, the customer service number, the 800 number at Nadex. They'll tell you when we're running the next one, and then you guys can jump in on that. Okay? So I think we're out of time at this point. I think we'll wrap it up for right now. So thanks again for attending. Check out the survey. Let us know how we did, and we'll look forward to seeing you guys next week. All right? Have a great rest of the week trading, and we'll see you next time.